What's going on YouTube? This is Dave's Daily Trades, where I post daily AMC technical analysis, price predictions, and of course, bring you the latest and greatest information. If you could be so kind to hit that like and subscribe button, I would greatly appreciate that. So I do have quite an interesting video for you folks today. We're really going to go through some behind the scenes of what's going on, some new rule change proposals, and of course, AMC and how this relates to the overall market. So of course, right now on my screen, I do have 3 daily charts up, one being AMC, one being the SPY, and of course, Bitcoin as well. So of course, AMC, we have been tracking this wedge pattern that has been forming. I know this doesn't look perfect, but this is just a rough estimate of where we are, really consolidating close to this $60 range and in between $50 and $60 for the past couple of days. So really what I want to show you is just taking a look at the SPY here. This wedge pattern that has been forming, of course, has been a rising wedge pattern since the first market correction in March. Well, late February, early March. And of course, as you guys can see, we've been respecting this channel very, very smoothly, of course, since that first correction. But the biggest thing is here. I'll zoom in here. You guys can see we actually just fell out of this pattern quite severely, which has been the first time since literally March of 2020 since that has first happened. So of course, just because of the size of this wedge pattern, it definitely is significant. And of course, I'll go on later in the video and describe exactly why this has happened. And of course, Bitcoin too, since that first market correction, we've been trading in this pattern here very, very smoothly. Of course, we did break out of this in early to mid-April, and I really thought we were going to hold this resistance level here at just around 47,000, but have really fell even past my second resistance, which was at 40,000, and trading sideways right now. Of course, we're going to dig into why this is going on, what's happening, and really to me, with Bitcoin at least, this looks like a perfect head and shoulders pattern. So could really kind of bring some big market moves next week and actually for the next couple of weeks, I would say. Of course, with SPY breaking out and with Bitcoin dropping down too, I really think we're about to see some interesting things going on behind the scenes. So I do want to navigate here to this Reddit article posted on Superstonk. I'll link this in the comment sections below. I'm not going to go through everything on this post, just really the key overview of what this is showing and what this is telling us. So first, we do have the Reverse Repurchase Agreements, RRPs. So what is this, of course? So, of course, really this is just a short-term agreement to purchase securities in order to sell them back at a slightly higher price. So why is this significant? It's because the securities were actually being purchased were treasury bonds, and it was a fixed fee of 0.00%, which, guys, clearly that's nothing. It's not really something that banks were all over. We'll get into why this is going on here. And of course, the RRP, did just get raised to 0.05%. So I'll show you that here. So, of course, yes, why are you saying banks were doing trades for literally no profit? You are right. But due to rates being zero, banks didn't profit at all, but they still got treasury bonds. And why this is important is because treasury bonds are actually collaterals. And of course, you don't want all of these liabilities on your bank statement because, of course, you are going to have to pay interest on that. And that just summarizes this right here. We can look at the M1 money supply, which is, of course, how much money they're actually holding on the sidelines right now. And guys, look at this from 2014 and now we're here to 2021. Very significant. That's a lot of cash to have on the sides. So what's changed? Fed raised the rates to 0.05 since June 17th. And pretty much, guys, look at this right here. We're going to read this word for word. We spiked to an all-time high of 755 billion in 68 counterparties. As of June 18th, it was 747 billion with 61 counterparties, which goes to 12.25 billion per each counterparty, which is absolutely insane. I love this meme over here. Yes, boy, that escalated quickly. And I think this escalation is actually just going to continue to jump here. So of course, this is looking at the counterparties and the total in billions. Guys, as we can see, since early 2021, this has just been an absolute tier. Of course, starting under just about 100 billion and now reaching upwards of close to 700, actually over 750 billion, which is absolutely insane. And really looking at this chart here, we can really come back here and say, yes, boy, that did escalate hella quickly. So of course, everyone wants to join in on this party. After the Fed raising the rates to this amount, like also the counterparties increased considerably, as we can see in the charts above. On the day, Fed also told Main Street Media that inflation at the end of the year would be slightly up at the promised 2%. So, of course, if the miserably 0.05% was really so desirable by other institutions, even without inflation at a higher levels. In this opinion here, there is no good investment out there, and institutions prefer solidity. So, of course, literally having nothing, just having cash on the sidelines, even while losing money due to inflation. Of course, all this money you have on the sidelines, if inflation is at 2%, that means you should be getting at least 2% of your money. But all of these counterparties here are actually fine with losing money because there is nothing good on the market right now. So, of course, that's kind of crazy. And, of course, as we kind of touched upon earlier, saying that, buying bonds was really the best way for these counterparties to raise, or to put their money rather, to store it there. But guys, all of these bonds and investments are really so risky. So triple C bonds, for example, are literally one step away from D, which is default. So of course, that's not desirable. Of course, when you're getting such a low rate, 0.05% on that for taking a high risk, no brainer. No one's going to take that trade. Of course not. So they are literally storing their cash for a rainy day and would rather have cash on the sideline, lose money due to inflation, than put their money into these bonds that are going to be so risky and not provide a valuable return for it. Of course, risk and reward, guys. So the higher your risk is, the higher the reward is. So if you're taking on junk bonds here, you should be getting a lot more compensation on that other end because it is so risky and you are so close to that default. Default means, guys, they're not paying you back. Your money's gone. That's really what it is. Of course, inflation, guys. Really, I'm not going to dig through this so much, but of course, as we can see, inflation is growing. The Fed is really trying to not get into this conversation right now, but of course, it is a major discussion everywhere. Turn into Fox, CNBC, really talking about this nonstop. And this is really the most important here, saying that really since the inflation right now is the highest reading since August of 2008. What happened in August of 2008? That was right before the housing market came down. So really, this is showing us that some really bad shit is going on behind the scenes. And guys, I'm not even going to go through these links or go through this, but yes, things are becoming more expensive. Go to Home Depot, Lowe's, you're going to see that lumber prices went through the roof. Don't buy it. Don't build a house right now. Don't be doing all these renovations because you're going to spend a shit ton of money. And of course, pork, sugar, commodity foods and beverages, all those price index are going through the roof. I did watch something interesting on Instagram the other day saying someone went to Whole Foods to buy a dinner. Typically they'll spend $30 to $40 for their dinner and they'll have a great dinner, sure. But her last time at Whole Foods, she spent over $100 because food has just been going through the roof. And as we can see right here, price in February, it was $87.45 up to $115.15. Guys, that's 31.67%. For pork, up almost 40%. And sugar, 24%. That's insane. That's absolutely insane. So, of course, feds are promising us lower rates. It's not happening. This inflation is coming. But really, going through all of that, definitely nothing that we didn't know, I would say. Just if you're shopping, you're going to realize this right off the bat. Prices going up. What the hell's going on? Beautiful. So collaterals. What is a collateral? So the term collateral refers to an asset that a lender accepts as a security for a loan. The collateral acts as a form of protection for the lender, of course. So you want to buy a house, you got to put some collateral on the side just in case you don't make your payment, so that collateral is there as a good faith measure. Same thing in the stock market. All right. So On May 4th, SR NSCC 2021-802 got in place. And we're just going to read what this is. But essentially, to quote this, qualifying liquid resources to include, among other things, lines of credit without material adverse change provisions that are readily available and convertible into cash. So what this means, no more crypto pumps, no more pump and dumps that we saw in March and April. Guys, there were some stocks that were going 200-300% and then falling 400 or 500% the next day. It's absolutely insane. And really what I want to show you guys here is the correlation, and this is actually TradingView right here. This is a great charting service. Definitely check it out. No, I do not get paid or I do not get commission on TradingView. I've personally used in the past, but of course since have switched over to Webull. On the desktop view, for some reason though, Webull doesn't have the compare button. That's only on the mobile app. So until that happens, I will still be using TradingView. But guys, what we can really see from this is Bitcoin going up actually was inversely correlating with AMC. So of course, here we did see some lows for AMC. This was when we were trading at like $2. During this run up, of course, to $20, what happened? Bitcoin drops down. So once Bitcoin drops down, AMC, of course, drops down. Bitcoin goes up. And then kind of most importantly here, this is when we were trading sideways for literally, I think it was like 4 months. AMC was trading about $8 here. That's when Bitcoin was at its high of, this was somewhere around like 64,000. Since then, it's really off the lows, trading at 38,000. And what happened with AMC? Boom, through the roof. Absolutely through the roof. So that's interesting, guys, and really shows that the collateral that these hedge funds, market makers were using was actually through cryptocurrency. And I'm just using Bitcoin as an example here, but really the entire crypto market has been trading really almost identically. So just using Bitcoin here, but you can use Ethereum, you can use Dogecoin, you can use really anything else to get this same picture painted here. So we'll go back to, this article right here. So now institutions are trying really hard to find bonds that they can rely on just on treasury ones through the RRPs. All the numbers are increasing daily amounts and counterparties on average per counterparty. And this is not a good sign at all, indicating they are exposed more and more every day than they were before. So taking a look here, margin debt. So margin debt is keep on rising. So as we can see, guys, this was the right here, 7/1/2007. This was really the peak before the housing market crash. So what can we see, guys? We're literally just about double from when the 2008 housing market crashed, which is absolutely insane. This margin debt is piling up. And look at the S&P. It's really directly correlated with this, which is very, very interesting. So, of course, NSCC filed a rule, SR NSCC 2021-002, that margin calls, that will margin call its members automatically. Keyword is automatically when over leveraged. This applies perfectly here and could be a catalyst for the mother of all short squeezes. Members will have 1 hour to meet the requirements if margin called, or liquidation will come automatically. This rule could be approved this Monday, June 21st. Absolutely insane. So this I'm going to fly through real quick for you guys, but this is just some correlation going on in the market. Of course, we did see the RRP in the SPY. This was at first not correlated at all. But of course, we scroll down here, and this is just zooming into the past month or so, just about month and a half actually. And look at this, literally almost identical, guys. We have a slight dip here, real big dip here in the SPY. That's very interesting. Now we look at the SPY in the Tesla. They are literally almost directly correlated since mid-March. And now we look here, same thing going on. Look at this correlation, guys. Absolutely insane. Virgin Galactic and Twitter, just more and more examples, guys. And then the Russell and the Dow Jones Industrial Average. Absolutely insane. Correlation wasn't here on May 4th. Absolutely identical. So just a thoughts and opinions here. So in my opinion, or in the writer's opinion here, 2021-802 must be quote unquote blamed for these meaningless market movements these past couple of weeks. Institutions were cooking their books with junk crypto, bonds, and stocks the way we could appear healthy via pump to numbers. Of course, that's really kind of showing, guys, we're pumping up all this shit, the junk bonds, junk cryptos that we've never heard of before, just to make their numbers look really good on the books. And of course, that hasn't happened. And yeah, of course, the crypto that had a like 3 million% increase in one day, like, come on, guys, that's ridiculous. That doesn't happen in a regular market. So, of course, on May 4th, RRPs, bonds, and indexes all started moving in the same way. And 1 week later, May 12th, even stocks were doing the same. Crypto started tanking hard about May 12th, and now they are being dumped all together at the same time. So we did take a look at Bitcoin. Where am I here? Over here, guys. Look at this. Off the high quite a bit from just about, call it 65 down to 35, 36 now. So that's a pretty significant gap. So anyways, what's next? And just to sum this all up. So on this Monday coming up in the market, 002 could be approved. And if so, we should see a drastic market change since everyone is over leveraged. Margin calls will come. The whole market will be bred for days, probably till the end of June, since it's also the end of the second fiscal quarter. And don't forget that this Friday, June 25th, is also Russell's index rebalance, and GME should leave the Russell 2000, enter the Russell 1000. AMC is actually staying in the Russell 2000 for now, but of course for GME, it is moving to the Russell 1000. It must have a market cap of 7.3 billion or above. Now it sits at literally 14, so double the requirement. RRP will go up pretty sure, and it could even reach $2 trillion on June 30th. So guys, this has a little bit of room to run here, which is just going to make this market correction absolutely so much worse. Inflation will be even higher now, and don't forget on July 1, mortgages could start defaulting, which of course is not good at all. Anyways, at this point, I think margin calls will increase in frequency, maybe also leading to some liquidations. Then shorts will be covered, and failure to delivers will have to be bought. We are already in the end game, but we didn't know. A market crash seems to be on the horizon, and it will hurt so much, even worse than the 2008 financial crisis, which he is saying is literally going to be a joke. And of course, we have Homer Simpson here saying the end is near. And how many times, guys, has Homer Simpson been absolutely correct on just regular things happening in our day-to-day lives? So it's really some quite interesting things going on, guys. It's really, really scary. And of course, I did want to point here to Michael Berry. Obviously, he is back on Twitter. And this I saw this morning. It was too funny. But everybody remembers Troy Polamalu with that beautiful hair, the biggest spokesperson for Head and Shoulders. And of course, we'll take a look at this chart. I did point this out here. Guys, look at that. This is picture perfect Head and Shoulders pattern. Doesn't look good for Bitcoin. Doesn't look good for the overall market. But, you know, it does look good. AMC and GME, baby. It's going to be insane. And of course, we did touch upon 002. And this person right here on Twitter, definitely give him a follow. Really posting some really good information, mostly on AMC and a few things on GME. But really just to summarize what this rule is, it is pretty much guaranteed to be passed on June 21st, which is Monday. This is a ruling that forces short hedge funds to report their short positions on a new SEC form. Any failure of filing will let the system auto-liquidate these positions, like we talked about before. I just thought this was the most important and just easy to understand description of what this rule is. Me personally, I go crazy reading through these giant documents, so having brilliant people like this who can sum it up in 2 sentences, I love it. So, guys, I don't want to be the one kind of screaming market correction here, but I'm really just bringing you the facts and the information of what's going on behind the scenes. And as we know, guys, margin calls, forced liquidations, buying back failure to delivers, AMC is going to have a hell of a next 3 weeks. It's going to be absolutely insane. So, guys, really just want to end the video just taking a look at this right here. AMC trading in this wedge pattern, looking to absolutely explode. Bitcoin trading in this head and shoulders type pattern. Of course, head and shoulders, very, very bearish pattern, and we can expect Bitcoin to fall down quite a bit. possibly even down here to my next area right around $20,000, but we'll see if that can even hold. And then S&P breaking out of that. So I think this market correction really began on Friday, and we're going to see what happens this week and the next couple of weeks. But really, most importantly, guys, if we do start to see this market correction in AMC doesn't absolutely go through the roof, don't worry about it. This is going to take time. This is going to take weeks to play out. Because, guys, if we look back here at this last one, this was a crazy crash here that we saw in February. This was not an overnight thing. This was literally weeks of happening. So this fall, yeah, we could kind of find support here at 380, but this fall is going to take literally weeks to play out. I know in that article they said end of June. I think it's going to be, honestly, probably about middle of July, maybe even early August at this end. So definitely stay tuned. I'm going to be posting daily updates on these three indices right here, seeing what's going on, comparing AMC with Bitcoin, with the SPY, in the overall market, and really just trying to step outside of just focusing on AMC because, yes, there's so much to cover, but there's so many people out there covering that information right now where I just want to be different and provide you guys with a little twist and really to understand what's going on in this overall market. So with that said, guys, thank you so much for sticking with me to the end. Definitely hit that like button and subscribe, and tune in for the next video. Later.